Hello, everyone. As it pertains to you, good morning, good afternoon, good evening. Thank you for joining this panel, and I hope you've been enjoying what is now day 4 of the Island Innovation Conference. You've taken your time to be with us, and if you've enjoyed some of the events that I have, because you live in or are passionate about islands, and if you've joined this panel, I will assume that you have an interest or passion about insurance. Island communities in the insurance global community have something in common. We are all both on the forefront of climate change, combining the particular hazards that we see at our own locations with the knowledge that the global issues that we're confronting will require an all hands on deck solution and global collaboration and partnership to promote mitigation, resilience, and adaptation. With that, to learn about ourselves and where you are, let me invite you to participate in a chat and a poll about our current locations. And while you're looking, I do not see Bermuda quite exactly, which is in the mid-Atlantic, but I am indeed from Bermuda, and here in my capacity as chair of the Bermuda Business Development Agency and as chair of the Bermuda Institute for Ocean Sciences. So as the closest region geographically, I'll put North America, but I hesitate to do so. Okay, and we'll give the poll a little bit more time. And our results. Fantastic. As expected, a very diverse result. So welcome. As we proceed, please continue to add your location and your information, your comments and questions to the chat, and we'll do our best, time permitting, to address those as we go. But I'm very pleased to be able to commence with a very exciting presentation that has been pre-recorded for our collective behalf from Aholo Tupalo. He is the CEO of the Pacific Catastrophe Risk Insurance Company and has 25 years of experience in the economic management, finance, and development sectors. Previously, he was the Climate Finance and Public Financial Management Advisor at the Pacific Island Forum, providing strategic advice in the nexus between public finance and climate change finance. He's also the former Chief Secretary and Secretary to Cabinet for the Government of Tonga, the Acting Chief Executive Officer and Head of Age Management for the Tonga Ministry of Finance, and is very committed personally to enhancing accessible and affordable climate and disaster-related financial solutions for Pacific Islands. Very pleased to introduce his virtual presentation, and I'm sure we'll all enjoy it.
Greetings from the Blue Pacific. Good morning, good afternoon, and good evening to all of you, from whichever part of the globe you are joining us at this year's Island Finance Forum. It gives me great pleasure to once again be a part of this exciting and important virtual dialogue on behalf of the Pacific Catastrophe Reef Insurance Company, or PICRIC for short. I want to acknowledge the organizers who have put so much into making this event possible, and I want to acknowledge the many esteemed experts, colleagues, and fellow travelers on this journey addressing financial resilience for island nations. But even more so, I want to acknowledge the many island nations, the thousands of communities, the hundreds of thousands of families, and the millions of individuals who are daily directly exposed to the near and present risk associated with the increased incidence of climate and natural disasters. Many participating today may not realize that in this respect, Pacific Island nations are among the most vulnerable countries in the world. They are threatened by rising sea levels, by stronger and more frequent tropical storms and cyclones, by earthquakes and tsunamis, and in some incidents also by volcanic eruptions. Such incidents cause massive physical shock and humanitarian crisis, imposing enormous burden on modest financial means. The World Risk Index 2021 ranks several Pacific Island countries among the most at-risk countries, with Vanuatu, Solomon Islands, and Tonga ranking first, second, and third, respectively, and Papua New Guinea, Fiji, and Kiribati ranking among the top 20. It is the security of such nations, communities, their homes, their lives, their livelihood, and their hopes for a future which today more than ever before have been placed in the hands of the likes of us participating in this forum. Nations which are highly exposed to extraordinary financial risk are seeking real solutions to real problems and desire real decisive actions now. Indeed, as it was only a few short months ago that a great calamity beset my home country of Tonga. You can understand why I take the missions of helping Pacific Island nations manage and mitigate catastrophic risk quite personally. This recent tragic incident has been a timely reminder to all in positions of influence across the Pacific that never before has there been a more needful time to be insightful, to be inspired, to be innovative, and to be courageous in taking bold steps to address the financial impact that climate and natural disaster visit upon our island homes. Decisive action is required now, or for some it will simply be too late. So, what is it the Pacific Catastrophe Risk Insurance Company, and what do we do? Our name provides some clear hints, but let me explain it this way. At the onset of a natural hazard event, Pacific Island nations require rapid response, disaster risk financing instruments that provide immediate cash to cover emergency response and maintain basic public services. However, access to short-term liquidity is often constrained due to the small size of island economies, which in turn restricts their borrowing capacity and access to financial markets. Compounding this effect, the island nations centrally have limited budget reserves, which when catastrophe strikes leaves governments with no choice other than to reallocate public resources away from national development priorities. Against this background, in 2007, ministers of finance from the region and development partners began to explore catastrophic risk insurance as a possible means of addressing the observed need. This catalyzed the Pacific Catastrophe Risk Assessment and Financing Initiative, PCRAFI, Phase 1, which laid the technical foundations. A successful pilot phase ensured, and subsequently in 2015, the Forum Economic Ministers agreed to establish a dedicated regional facility to provide immediate liquidity to impacted nations following a disaster. In June 2016, the Pacific Catastrophe Risk Insurance Company was established, domiciled in the Cook Islands. Our funding comes from a mix of member nations' contributions and generous contributions from Canada, Germany, Japan, the United Kingdom, and the United States, with ongoing support from the World Bank Group. We are a dedicated specialist provider of disaster risk finance services and solutions to the Pacific Islands region. We deliver a program of support built on leading-edge technical assistance, targeted collaborations, and innovative product options. Our mission is to help our region's island nations better prepare, structure, and manage finance to foster disaster resilience and ensure rapid access to funds when they are needed most. In practical terms, we facilitate the transfer and management of sovereign risk related to climate and natural disasters through pragmatic insurance products. Such products define a set of parameters which determine whether or not a payout is to be made against a current policy upon occurrence of a prescribed event. If the event meets or exceeds agreed trigger points, then an agreed payment is made to the country covered by the policy. Such products remove the need for damage assessment to validate a claim ahead of payment, and thus address the need for timeliness in the aftermath of a catastrophic event. They also offer certainty as the amount paid out is determined upfront. Currently, we offer coverage for the impact of cyclone, earthquake, and tsunami caused by earthquake. We know a wider range of products is required to address a wide array of risk faced across the region, and we are excited to be on the pathway to introducing additional products such as one for excess rainfall and drought. Additionally, by evolving into a segregated cell company, we can now explore options for partnership with the private sector and other innovative disaster risk financing options. Key to our capacity to position such products within closer reach of the Pacific Island nations is the establishment of a regional risk pool rather than individual nations taking their insurance needs to the market. Pooling creates scale, which is more attractive to insurers and which secures more favorable risk pricing. By working together, both individual nations and the region as a whole all make gains. And that's a point I really want to emphasize: the need to work together to address the risk we share. Successful development of appropriate disaster risk finance solutions requires indeed demands, collaborations, and the time has passed for at-risk nations to claim, name, and shame. The time has passed for development partners to adopt a silo mentality or to try and carve out exclusive ownership of bespoke solutions and services. There is now such too much at stake. This is a time for shared vision, shared knowledge, shared effort, and shared success. At Pickwick, our doors are open to anyone, to any organizations, to any persons of influence who brings an open, innovative mindset to the challenge before us. We embrace the goodwill and ongoing support of donors and development partners. We encourage decisive, tangible financial support and buy-in by a greater number of regional leaders at the front line of the challenge before us. What better way to attract further support and additional donors than by demonstrating real commitment to what has already been established for the benefit of the region. With such support, Pickwick will continue to play a critically important role in promoting financial innovations that shifts the Pacific Islands from being vulnerable and at risk to being resilient in the face of risk. As I wrap up my presentations, I want to share a statement made to me long ago. The persons with whom I was speaking suggested that in human endeavor, an outcome was the product of thinking plus behavior. That is, that outcome equals thinking plus behavior. It is clear to me that as we gather in this forum, we are faced with the challenge of delivering a different outcome, or more correctly, a range of different outcomes for those most at risk. This requires a change in thinking or a change in behavior, or most likely, a change in both. My personal challenge is clear. As a consequence of participating in this forum, how am I going to think or behave differently to secure a different outcome? And likewise, how am I going to encourage others in positions of influence to also think and behave differently? Right now, honestly, I cannot answer those questions clearly. But what I do know is that when I am next confronted by the image of a villager who has just seen his house and livelihood blown away, or the image of a mother with a child held high above her head as she wades through neck-high water to safety, I want to be sure my mind and my feet are not in the same place they are today. Thank you.
What a perfect kickoff for our discussion. That range from the global picture of climate risk and the opportunities for innovate that also confront us alongside with those challenges to the specifics of segregated cells. But I also wrote down, we all need to work together and change our thinking, change our behavior, and ask ourselves after this forum, what are we going to change together? Let's stay in the private sector for our next speaker. We're very pleased to introduce Ms. Telly Valeriono, who has 20 years of experience as a financial innovator, serial entrepreneur, and private banker. She's currently the head of governance and execution for the Bantu Blockchain Foundation, Seychelles Foundation with offices in Nigeria, which governs the Bantu network infrastructure. And she's also the International Director of Governance and Compliance for the JD Urway Finance Group, headquartered in Canada with operations in 5 continents. Thank you for joining us. Welcome.
Thank you for having me. I think I'm not speaking first, but thank you for having me. It's a pleasure, and I want to thank the host for Island Innovation. Just as an intro, as I said, I wear a couple of hats. On the one hand, when we're talking about innovation, yes, we're here at the forefront when we're dealing with blockchain and cryptocurrencies, but also wearing my other hat as a private banker. In our space, we have been working on a number of climate innovation projects and products, especially that relate to risk mitigation. So I think I would stop here from my other speakers, and then I'll come back and chip in. Thanks.
Thank you, Telly. Why don't we turn now to Simon Young. Dr. Young co-leads the Disaster Risk Financing and Parametrics Group within Willis Towers Watson's Climate and Resilience Hub, working on the innovative collection, modeling, and use of hazard and risk data for risk management tools and risk financing instruments. He's a global leader in the space and an old friend. Simon, it's good to see you. Welcome.
Thanks very much, Steve. It's great to be here with my fellow panelists and all of the audience. It's great to see Lotu as well, and his message from the Pacific. I know he's incredibly passionate about bringing the things that we do in the insurance industry, which you know very well, Steve, into new areas, and I think that's what we're going to try and cover a little bit today. Insurance industry can be, from the outside, looks like it's a little bit of an established part of the financial market, which isn't necessarily at the cutting edge of innovation, et cetera. And one might ask what the insurance industry can do for me if I'm a small island developing state or a community or an individual on that island. So I hope we can unlock some of the potential here.
Great. Let me now invite for a brief presentation and introduction, Josh Ling, a climate change specialist at the Asian Development Bank. He was experienced working on the topics of disaster risk financing and financial inclusion through roles with the World Food Program, Mercy Corps, the World Bank, and the International Labor Organization. Prior to joining ADB, Josh worked as a financial inclusion specialist at the World Food Program in Rome. And as all of us should perhaps, has a background and started his career as an actuary. Josh, welcome.
Thanks very much. Yes, thanks, Steve. My name is Josh Ling. I work as a climate change specialist at the Asian Development Bank, and in that role, am the fund manager of ACLIF. So perhaps I could bring up a few slides and was going to talk a little bit about the fund and some of the projects that it's supported. So just bear with me a moment, I'll bring that up. Great, assuming you can see it, so please yell out if you don't. So I guess we're all aware of the context, and speaking very specifically about Asia and the Pacific, which is responsible for around 50% of global greenhouse gas emissions, where those level of emissions continues to rise. It's also a region that experiences devastating extreme weather events, where obviously climate change is making these more frequent and more severe, as we've already heard in the first presentation. So developing countries have an urgent need to invest in climate change mitigation and adaptation, and to limit global warming to below the 2-degree target. Estimates suggest annual investment of around 200 billion in climate-related infrastructure is needed across the region until 2030, increasing even higher beyond that. So really, Asia and the Pacific, from the perspective of ADB, is at the front line of the climate change battle, and really where that battle is won or lost. So what I wanted to talk about today is how ACLIF works. And so often when we're talking about insurance, we're thinking about how to address extreme weather events, and I do want to get to that. But there's also another element of the fund, which is really how do we unlock investment into climate change mitigation and adaptation. So ACLIF is a dedicated fund that supports the development and implementation of financial risk management products that are trying to unlock investment into climate change mitigation and adaptation. It sits as a trust fund within the Asian Development Bank. Initial capital was provided by the government of Germany. And so it's really supporting ADB projects to scale up the climate investment and climate impact that they have. There's a few different areas that the fund supports. So scaling up the adoption of climate technologies. So for instance, if there's a new type of climate technology.
Hey, sorry to interrupt. I think
Yes.
when you're moving something on the table, it's rustling and interrupting you. So
Okay,
I'm not sure what it was, but just to let you know.
Yeah, thanks a lot. So I just have notes here, but I'll keep them still. So scaling up the adoption of climate technologies, if we want to, for instance, guarantee the performance of new climate technologies that can support their uptake by giving assurance to new users. So the fund has, for instance, supported renewable energy solutions in the Pacific Islands. Another category of support where we're looking at supporting investment into climate sensitive sectors of the economy, where we're looking at supporting, for instance, the development and issuance of blue bonds that can scale up investments into the ocean economy. We're looking to mobilize new sources of private sector climate financing. So looking at how can we de-risk green finance solutions, and then obviously addressing the impacts of extreme weather events. And there's a few examples of support that the fund has given that I could expand on here. So we're looking at how do we develop climate risk insurance in a number of different contexts. So MSMEs are driving forces behind the economies of developing Asia. And so some statistics where they account for 97% of all enterprises and 69% of all labor forces. And yet their risk management needs are often overlooked. Microinsurance products are targeting low-income individuals. Macroinsurance products are targeting government risk management needs. And we're looking at how can we analyze potential business models and insurance product options that better support small businesses in managing their climate risks. We're working very closely with the V20 and their new sustainable insurance facility. So a group of nations that are particularly vulnerable to climate risks and have approved projects in the Philippines and Fiji. We're also looking at climate risk insurance solutions to support microfinance in India. We're working with the microfinance network there. We're targeting specifically microfinance institutions that have predominantly female borrowers. So we expect at least 80% of beneficiaries to be women. And this bearing in mind that women and children are often more impacted by climate disasters when they do happen. We're also working to develop disaster insurance solutions for city governments in the Philippines. These are parametric insurance solutions, so they're dependent on index levels being met, for instance, for typhoon or earthquake risk, where once those parameters are reached, payouts are made to provide fast dispersing budget support in the aftermath of a disaster. We have 10 cities that we're initially targeting, which we think will provide indirect protection to up to 9 million people. And it's an insurance product that complements an existing contingent disaster financing solution that's offered by ADB to the government of Philippines. And one last example is looking at how we can develop coral reef finance and insurance solutions in Asia and the Pacific. So building long-term financing solutions for better management of coral reef ecosystems, and including insurance solutions that provide payouts to finance restoration in the event of a climate disaster, looking at pre-identified sites in Fiji, the Philippines, Solomon Islands, and Indonesia. So obviously, coastal communities are heavily dependent on coral reefs, both for income and also for the climate resilience that they provide. Just to briefly mention our approach, we are looking at things that perhaps can be a little bit innovative, things that haven't been tried before, but we're also looking at how can these be replicated into new markets. So if ACLIF is a fund that can be tapped to be able to support the initial development of new types of products. We also want to see how those products can be replicated. And we see that it is important to show that these products can scale. It's important both to create a business case for the private sector in minimizing the costs, and obviously, most importantly, to reach as many people as we can with these types of interventions. So just briefly to mention, you're welcome to reach out if you would like more information. There's a website there, adb.org/acliff, that has some more information about the fund and an overview video that basically explains the work very briefly. So I'll pause there. Thanks very much.
Josh, that was terrific. Before we move on, I wonder if I can quickly pose one question to you. Really exciting, so important to be bringing that capital and that expertise to the world. How does the fund decide which projects to prioritize when allocating funding? Can you just summarize for us your framework and how you think about prioritization?
Absolutely. Thanks, Steve. So we do have a number of criteria. I briefly showed some of the things that we assess for each project on that last slide, but wanted to emphasize, I guess, that we're really working through ADB's operations. So regional departments that are in close contact with governments and really looking for the ways that the bank can really push forward with what are the priorities in the individual governments that we're working with. So governments who, for instance, have set their nationally determined contributions, NDCs, have other climate priorities, and have particular initiatives that they want to emphasize as part of those. We really want to provide financing and unlock new forms of financing to be able to support those objectives, or work with developing member countries of Asia and the Pacific to come up with new types of solutions that might help to solve some of these problems.
That's really exciting, Josh. Josh, you've got such a resonance with your presentation that a number of folks are asking to repost your contact slide. Why don't I ask you to, if you don't mind, put your contacts into the chat so we can move from what I think you've characterized of innovative function to what Simon has warned us is sometimes considered traditional finance functions, the insurance and reinsurance space, because Dr. Young does as well have some presentation slides to share with us.
Thanks very much, Steve. Let me bring up my slides here. Okay. Hopefully you can see see the slides.
That's great.
Great. So I'm going to pick up a little bit on one of Josh's later slides there and concentrate my brief intervention on what we've been doing in the particularly in the ecosystem resilience space and applying insurance tools and products to support ecosystem resilience and the resilience of the dependent coastal communities, particularly around coral reefs. But we've been thinking about doing this for other coastal ecosystems as well. So the insurance industry brings kind of two aspects to it. The insurance industry isn't all about selling insurance. There are also the risk understanding tools that the insurance industry uses on a day-to-day basis. And these are really, really important and interesting and revealing, I think, for some of this, for fully understanding the risk and resilience of coastal communities. And so I've put some bullets down here that will resonate with some of the more knowledgeable of you around insurance, but I'll quickly describe some of them as well. Catastrophe risk modeling is something that the insurance industry uses to understand risks from extreme events, hurricanes, for example, and we've developed a model which uses those principles, which have been in place for 30 plus years in the global insurance industry to apply to coral reefs in particular, but there's also emerging models for mangroves and other coastal ecosystems. We've also developed some models for slow onset climate hazards such as coral bleaching. And we've not only been looking backwards in these models in terms of what's been happening historically, but also can look forwards as to what we expect to happen in the future climate, which is obviously critical in this context. It links into understanding of ecosystem asset and services valuations. This is a standard piece of insurance. The insurance toolkit as well is understanding what's at risk, what the values are, what the service provision is. And that links into benefit cost analysis for evaluating what we call risk financing options, which may or may not be insurance, but understanding how to manage that risk from a financial perspective is really important. And it also provides a price signaling to which can be a good incentive to policy change. So reduction of polluting activities are more, we think, become more obvious if you can demonstrate the financial costs of that polluting activities and also the kind of the ways in which you can address that activity. So that's on the risk understanding side, and then on the risk financing side, we've been kind of uncovering various use cases for insurance in the ecosystem resilience space. As Steve very well knows, the global economy relies heavily on insurance in for a number of different ways. It does underpin the global economic system, but it hasn't really been used for the natural environment very much. So we're looking at ways in which there are kind of sweet spots, low-hanging fruit, if you like, for deploying some of the risk financing instruments that we've been developing over the last 10 or 15 years, which mainly use this form of insurance called parametric insurance, which Josh mentioned already, and which kind of addresses some of the challenges with deploying traditional, what we call indemnity insurance, which is what most people are familiar with, in a space where you're talking about global or public goods, public commons. You're not talking about ownership of ecosystems, for example, but more about benefiting from their services. And so that there are some challenges to deploying traditional asset-based insurance around those, which this new form of insurance called parametric insurance can deal with. So I'll move to the next slide, which particularly focuses on coral reefs. We've been developing and implementing insurance coverage for coral reefs against cyclones. We've also developed programs for protection against heavy rain, which causes runoff, pollution events, etc., and also coral bleaching, although neither of those are yet actually in place. But the cyclone insurance is. We have a few kind of use cases under development, and a couple of that have actually been implemented. The main one we've implemented is to support rapid cleanup of coral reefs after hurricane events. Getting onto a reef, pulling off the debris, reattaching corals, etc., is really, really valuable if you can do it quickly. The benefit to cost ratio is something like 10 to 1 at worst, probably better than that, for getting onto the reef really, really early. And parametric insurance allows you to do that by triggering based on the size and location of the hurricane, rather than having to assess the actual damage that's taken place. So the money from the insurance can flow within a couple of weeks to go and support response brigades that have protocols in place already, are trained, and can go and do the work really, really quickly to improve the recovery profile of that particular reef. We've also looked at using insurance payouts to support fisherfolk, for example, whose livelihoods are impacted by damage to the reef, and where it's beneficial for those fishers not to fish heavily on the reef in the few weeks and months after a shock event, because that helps with reef recovery. So there's a model there where insurance is used to fill a gap in livelihood income for fisherfolk, and to therefore relieve the stress on the reef. Insurance can be used more generally as a kind of a hedge against interruption to a business, which is based around user fees, for example, for visitors to a coral reef. And there's emerging examples of that in various places around the world. And some of the kind of purveyors of that have been on other panels during this forum. This also helps to unlock investment. And as Yaba was talking about from the Global Coral Reef Fund on the previous panel, conservation investors are looking for de-risking mechanisms so that they can safely put their investors' money into these programs, and insurance is often part of that in traditional investment propositions. And so bringing these tools can help to unlock that investment. And then I'll briefly look at an example that we were involved with the Nature Conservancy towards the end of last year, where we put in place what we called a catastrophe wrapper around a blue bond issuance for sovereign debt in Belize, which is a really exciting opportunity and use case, which I think has a lot of potential. So quickly, just going through the Mesoamerican Reef program. I won't go into the details, but very happy to interact with people who want to know more about this. But we've identified seven individual reef areas within the Mesoamerican Reef, which is the largest barrier reef, second largest barrier reef system in the world, and the largest in the Western Hemisphere. All of these are protected areas. They cover all four of the Mesoamerican Reef countries, so Guatemala, Honduras, Belize, and Mexico. And by having this structure and the automatic triggers within this structure, we're actually kind of focusing the resources that are released through an insurance payout for when they're really needed for specific areas. And all of these areas have a written protocol for response. They have a trained and organized brigade of responders. So the money goes for a payout will go into the Mesoamerican Reefs Emergency Fund, and from there it can go very quickly out to pay for renting boats, paying for fuel, air tanks for the divers, equipment, all of these things which are kind of pre-budgeted and are ready to go. So, and this is kind of revolutionary, really. Reef response generally is ad hoc after a shock event, and often takes a long time to get organized, and is not very well funded, if at all. So this really brings a new dynamic to this and makes it a much more organized and therefore efficient and effective mechanism. And we're expanding this, working with the Caribbean Biodiversity Fund and with Karen, the CEO there, to expand this into the eastern part of the eastern and northern Caribbean. And then the final slide is just very quickly to highlight the structure that we put in place using parametric insurance to protect the repayments of debt repayments by the government of Belize under this incredible blue bond deal that the Nature Conservancy put in place, with the support of various actors, including Credit Suisse and the Development Finance Corporation of the US. I think the overall, the blue bond is incredibly beneficial to Belize's coastal ecosystems and communities. It frees up a lot of money to invest in those things over the 20-year life of the bond. And this catastrophe wrapper helps to de-risk the repayment of that bond. And obviously, debt default has been an issue for Belize, and debt payments and the overall indebtedness of island nations is a huge challenge for many of the countries that we're interested in. this forum. So this really demonstrates what can be done with a bit of innovation around issuance of blue bonds, but also protecting the repayments. And overall, the deal led to a rise of three slots on Belize's sovereign credit rating. And as many of you will understand, that sovereign credit rating is kind of a cap on any or almost all other investment into Belize. So for conservation investment, for example, it means that we can get a much better rating for investment, foreign direct investment into Belize to do climate mitigation, for example, and adaptation projects. So it's a really important way of kind of unlocking the potential for investment through de-risking the sovereign debt. I'll leave it there, Steve, and hand it back to you. Thank you.
Thank you, Simon. Before we go on, let me try to synthesize a couple of questions from the chat for you. And one, I'll invite other panelists, perhaps particularly Josh, to chime in as well. But Simon, you touched a bit on both on climate change in some respects, but also how modeling has informed the traditional and non-traditional reinsurance business. There's a lot of chatter in our world about, with accelerating climate change, to what degree can we use our traditional modeling methodologies, which depend upon historical deterministic data sets, to think about climate in coming years? And how does that possibility affect some of the innovations that you're working on at Willis Towers?
It's a great question, Steve. And I think it's been a little bit, I think the insurance industry has been a little bit slow to realize that looking backwards for precedent is no longer sufficient. And so I think we are moving towards having a much more flexible framework for both looking backwards and potentially looking forwards. If the climate models and the shock hazard elements can be deduced from those climate models, there's an issue of resolution around how we understand what future climate will look like relative to, let's say, a hurricane hitting Bermuda. So there are new techniques that need to be developed and perfected, I think, to make it a full spectrum from 150 years ago, which is what we know the hurricane history in the Atlantic pretty well, up to the year 2100 and beyond. But we've gotten a lot better at it over the last few years, and that will continue. I think the more interesting piece is that what we found is, and I'm sure you're the same, that when we talk to people in, let's say, the investment banking community about cat modeling tools in the climate context, it's a revelation to a lot of people that those tools exist. And so, and I think that's largely been a little bit, again, we've been a little bit slow to realize that those tools, there is some retooling needed done, but the fundamental process by which we capture hazard, vulnerability, and exposure and turn that into risk is absolutely applicable in the climate space and into future climate, and it is incredibly powerful in understanding what future risks and climate risk feeding into climate risk disclosure, which is coming through much more strongly from various regulators across the financial and economic sectors. So I think it's a really exciting time to be in this space, and the insurance industry is generally not the most innovative, I think it would be reasonable to say, but here we have a real opportunity, and I think that there's some really great stuff emerging.
Simon, that's very resonant with me. And on the one hand, it is true, of course, that our tools and expertise and methodologies are not well broadcast, and partly that's certainly as a reinsurer, global communication, not our strong suit. And at the same time, though, for some hazards and perils and understandings that we think we don't understand well, there's expertise underway in the world if we can go find it. And it ranges from, say, academia to local experts in island states who understand their hazard and see the changes that are coming. And through communication and collaboration, we can get a lot done. You threw up a slide, the inverted avocado, which was not an ag or crop product, but we got a number of questions about ag and crop innovation. So if I can invite you to comment on, can these techniques help farmers, help agricultural communities? And Josh, you touched upon it as well, but perhaps I can invite you to quickly comment and then we'll turn back to Telly.
Yeah, I'll quickly go first. And actually, Josh and I have worked on some things together. So a lot of the emergence of these parametric or index-based insurance instruments has been around agriculture and especially small-scale agriculture, and particularly in Africa. We haven't seen so much kind of in the island states, I would say, but certainly they are applicable. What I would say generally is that we've encountered challenges where the resolution of what we can do with these parametric instruments is too low to serve the needs of individual smallholder farmers, for example. And so if you have a particular trigger threshold which isn't quite met by a smallholder farmer, but they've had some impacts to their crop, the answer that they're not going to get a payout is not the right answer for this to be sustainable. So I think that will be something I would highlight, is that the scalability of some of these parametric instruments is actually not complete all the way down to smallholder farmers in small islands. So we need to be conscious of that and find ways to work with risk aggregators, for example, and microfinance institutions and other risk aggregators to capture that risk across a community or across an area, and that way kind of we kind of balance out that missing some farmers, but we're going to capture some farmers that haven't really been impacted, so it kind of evens out, and the law of large numbers starts to work in our favor. But Josh, it'd be great to hear from you as well. You've done more work than I have at that level.
Thanks, Simon. Yeah, no, I think you gave a really good summary and a very balanced discussion as well around some of the pros and cons. There's well, not cons, but rather limitations, and understanding those limitations to be able to still develop solutions that meet the needs of what they're trying to achieve or the target market that they're trying to serve. But one thing that came out of your presentation that I think could be worth re-emphasizing is that parametric insurance has that real advantage of being able to provide rapid payouts. And I think you gave the example of coral reefs, but in some of these other examples of businesses or agricultural sector, whatever it might be, the ability to provide rapid payouts is so crucial as well, because if payouts can't come immediately, then already the policyholders that were depending on them start to look at other mechanisms or other coping mechanisms that might have other negative consequences as well. And so if we're putting insurance in place, we really need to be mindful of how well it functions. And I think a key aspect of that is how rapidly can it provide that relief to whichever policyholder has suffered damages or losses in the aftermath of a climate event.
Josh and Simon, thank you. Telly, we had a brief introduction from you and are pleased to welcome you back. And we've already had a lot to chew on. I'd love to hear more of your perspective.
Sure thing. So my presentation is going to take two parts. On the one part, it's going to focus on some of the things we're doing in our institution to develop de-risking instruments to support climate finance. And then on the other end, coming to the end of the conversation, talking about the need for faster payments, the need for better models to reach the people at the bottom of the pyramid, maybe using microinsurance. I would just pretty much kind of brief on how we can optimize and leverage certain technologies in order, and new models in climate financial innovation that are being utilized to kind of reach those persons at the bottom of the pyramid. Also talk a little bit about some existing business models that we can emulate in order to reach the people at the bottom of the pyramid. So just rather quickly, I'm just going to share a few slides. Let's see if you can see my screen. Okay. Second, let's hit play. There you go. All right, so on one hand, I'm the head of compliance for this private financial group. We're headquartered in Canada, but we operate in 5 continents. And part of the products that we offer a number of different offerings within the group. We hold asset management licenses, banking licenses, etc. Just a few things that we do, the normal run-of-the-mill corporate trade finance project advisory as a private financial group. And then we also offer wealth and asset management services, which is pretty much what I'll be speaking to about. So just as a segue, just to kind of give a holistic view of this, of where we are, especially when we look at our focuses in the area of asset management. Pretty much our focus is really unlocking investments and unlocking liquidity as well as de-risking. So in our focus, a lot of the world is moving more towards alternative investments. As a private equity group, we still do focus on normal debt and equity, but then we're seeing more and more a demand for alternative investments. So this is just a snapshot. And in our context, I think we're a little different from other financial institutions where we already have a crypto footprint as well. So we do consider some of these products as alternative investment, new asset classes that are being emerging. So when you look at you could call it the multiverse, you could see it ranges across a different many financial assets, from commodities to credits, etc. So we basically have looked at how we could create certain products that allow us to leverage investments, especially in alternative investments, while we are also de-risking. So this is just a slide just looking at really the impact. If you really look at the impact of alternative investments and their contribution, it's really significant. If you look at it in the real economy, the economic impact is huge. It contributes towards GDP. Some of these we don't necessarily capture. It also facilitates innovation. So right now, when we're looking at the universe or multiverse of alternative investments, you're actually seeing a move away from the more, what we would have considered traditional, real estate and so on, into more new, very opportunistic areas. So if you're thinking about even things like carbon credits, etc., that will fall under the innovation space. It also fosters employment, of course. It strengthens governance, and of course, if you're looking at within firms, it improves productivity. So high level, we offer within our asset management group, multi-asset managed accounts, as well as we have more traditional hedge fund-like products that we offer to clients. So through our managed accounts and through our other fund management products, we have a number of funds. Some are US-based funds as well. We focus on a number of things such as climate, health tech, agri-tech, fintech. So with regards to the funds, those are more pooled vehicles, but then we also have created a product that we can facilitate through managed accounts. So basically, for our clients, whether they're in the private sector or in the public sector, we tend to open managed accounts for them, and they can invest directly through their own accounts. So we came up with a very specific de-risking product for climate finance. It's really a smart finance product. And we focus on both mitigation and also adaptation of project financing, especially those that support resilience. So one of the big challenges in the space of climate adaptation is that they're so diverse. There are so many types of projects that come out with climate adaptation. And a lot of the projects you find in the public sector might not necessarily have an immediate return model. So we pretty much came up with a fixed income alternative investment model that offers capital protection. Basically, clients are leveraging existing assets, so we more or less collateralize their funds. So we have been successful in using this with a lot of blended finance opportunities. And it's kind of important because you have private investors. This is the issue with climate finance. The private sector, for the most reason, are looking for bankable projects. And at the same time, the projects may have more of an impact focus and maybe not necessarily a return, a clear path for return. And also, perhaps it might take a lot more time to develop these projects. So we tend to find a lot of requests for financing for these products. And what we've done is created this product to de-risk. So you would have scenarios where we actually work with other hedge funds, fund managers, as well as family offices, and where they want to act, and also impact investors, where they want to actually invest, they normally would use our method and place an investment, their investment with us through our managed account product. Our fixed income investment, our fixed income product actually generates a little bit of a higher yield, a little higher than what is normally accustomed in the market. It's based on arbitrage opportunities. So in this context, they don't lose their capital, their principal, and they're able to kind of leverage the returns, the yields they're getting on a weekly or a monthly basis, depending on the amounts they've placed to actually invest in those projects. So this is definitely working. And they're able to still generate quite generous enough investments while still maintaining and protecting their principles. So this provides perfect downside protection while we're supporting the climate projects. So that's just that presentation. So on the other, I'll just stop sharing my screen. So on the other opportunities where we're talking about innovation, there are many different models, and I would say that I think one of the things we should be really looking at some existing models that exist. So for instance, Islamic finance is providing quite a, I'll say, a good base for looking at alternative type of insurance products. And what we're seeing in the space is people are developing micro-insurance products using not necessarily risk transfer instruments, but more mutual, you could say mutual cooperation-based instruments. So it's a risk pooling as opposed to risk transfer. And so this model is definitely growing, and we're able to incorporate that also within our investment space. So it's pretty much whatever fund is in, whatever pool is in our fund, we're able to then sort of share the contributions equally. So this sort of lowers the transaction cost for certain markets and making their contributions as opposed to premiums a lot cheaper. The other thing is what we're seeing, now moving my head into the fintech space, is a number of different models where from a microinsurance, they've managed to kind of combine the distribution of these mobile wallets, whether it is a mobile wallet based on a fiat-based infrastructure, or mobile wallet based on a decentralized ledger infrastructure. And through that, leveraging mobile wallets and leveraging new payment rails, they're able to actually lower costs. So this makes it much easier for clients to pay their premiums, and even automate some of their payments as well. So those are some of the things we're seeing. I have seen an actual model, a sample where blockchain-based insurance has actually been leveraged using combining parametric insurance, which is a useful tool. But I think going beyond just taking a policy document and then just attributing that policy document onto the blockchain is not necessarily enough to unlock and lower the costs. I think where we're seeing the industry move to is actually the issuance of microinsurance right there using the technologies as opposed to using the existing policies. So a combination of devices given to, say, for instance, farmers into their farms with sensors, and these sensors capturing the data, and then that being put in the cloud and converted into a parametric crop insurance product definitely goes a longer way than just taking an existing claim. It's not necessarily addressing the bottom of the pyramid per se. So that's just a few things I wanted to share.
Thank you very much for that. One thing that came up at the very start of our presentation was the degree to which women and children are differentially disadvantaged by climate risk. I wonder if any panelists would like to address that. It came from our first speaker, and how does some of the innovations you're working on, you've touched upon it, but particularly serve those populations and others at unusual need?
I don't think I'll be able to answer your question, Steve, completely, but we're certainly seeing it as an emerging theme, and I think it's a really, really very important one. Again, as we were discussing earlier, it's not something that jumps out from the insurance side as something that has been attention has been paid for, so it's paid to. So I think it's something that we are realizing we need to be able to kind of evaluate and include in our understanding of risk factors. So, the exposure, the way in which the exposed population changes between different places and different mixes of women and children, for example, and also then their vulnerabilities to those hazards and risks, but also then the delivery of actual, better outcomes, be they financial or other, and making sure that we address those in our construction of actual insurance mechanisms, so that the insurance payouts, for example, are going to where they're needed and to the right people, and they are able to deploy them in the way that's most effective. And that isn't always clear and obvious. So I think it's something we absolutely need to pay attention to. And we see it as part of a broader kind of financial services education and broadening the participation in the financial sector. And we have a couple of projects actually in the Pacific where we're doing this alongside partners, and kind of so bringing these insurance and kind of financial risk management tools to bear alongside other financial services.
Thank you, Simon. And maybe a final question that was provided in the chat, and to some degree you've touched upon it, so view this as an invitation to comment again, that much of our discussion talked about the risks and challenges that island communities face from climate change and natural disasters, and how your products and innovations will help. How are your products and innovations at the same time helping to accelerate and promote the growth of the blue economy, as well as protecting against risk?
I'm happy to jump in first again. I think we see it as one of the main benefits is going to be to unlock those financial flows. And the traditional investors, and Telly talked a little bit about this, they look for particular, or they have preconceived ideas about what risk reduction mechanisms, risk management mechanisms are part of the investment proposition. And insurance is quite often a box that needs to be ticked, or they think needs to be ticked. And so I think making some of these innovations in insurance products available is, goes part way to them, freeing up opportunities for mainstreaming those those sources of investment funds more. And so we don't have to concentrate on just a few small funds where they have a team and the awareness to look into these kind of issues. It can mainstream into the broader investment universe. And that's where we need it to be, right? We need to have access to the biggest pots of capital that we can, and to make that access easier, insurance is often part of the mix of, as I said, boxes that need to be ticked. So if an investor had come and said, we want to invest in a marine protected area that was going to be funded through collecting user fees, and we want to ensure the coral reef against damage, so that we have business protection against those user fees being interrupted. 5 years ago they wouldn't have known where to go, but now we have that available, and I think that's the kind of thing that we're thinking about, in rather than innovating on a case-by-case basis, to actually get these things to be much more mainstream, so that we can use them, and they're known about, and so investors can come and see that some of those risks can be protected through these mechanisms.
I think I would like to jump in here. Just to add to what Simon says, I think what's important is the key thing is really looking at a whole integrated risk management approach, and maybe layering of those risks, because you can't look at risk and isolate it and just look at, okay, well, it's climate, it's physical, it's this. You have to look at it from a holistic perspective. So if a project is being implemented, there might be indemnity risk for that company that's executing on it that you want to cover. So there's so many different risks, and then only the residual risks, then we can now look at things like parametric insurance, because those are risks that are not going to go away. So I think looking at it holistically and coming up with a package of what are the different areas, and looking across the value chain to say, what are the different areas and segments we can insure, then would provide a little bit more predictability and security for that product. So that's what to say. And then when you're looking at the ocean economy, again, this is a sector that is extremely difficult to finance, because not everything is clear cut. Okay, so I live in St. Kitts and Nevis, and we have a whole issue with coastal erosion, right? So something like coastal erosion, you're not necessarily going to see government spending in it and an immediate return. Maybe over time, and maybe through linkages with their tourism product, you can actually justify and make a business case. So in cases like that, I would say you have to definitely break it into the different components and have that layering approach addressed to it. So that's very key. Again, the issue of measurement is a big thing. The reason why all this parametric insurance was able to come about is because we can actually measure. There are certain metrics that we can measure. So you find a lot more support for climate mitigation because they have clear metrics that you can measure. So whether it's adopting renewable energy, and you can measure those metrics, and you can actually create a product with it, it's key. I think biggest issues would be how do we properly and adequately ensure for climate adaptation, one, because the reality is, as much as you mitigate, we've passed that. we're living in islands and we have to adapt and we have to be more resilient. The other issue too is how do we address for loss? Because I live in a hurricane belt, and every time we have a hurricane season, and some islands are severely hit, and we really have significant losses there. So loss and damage is still one of those areas that it's a bit challenging, and in as much as you're using things like parametric insurance, it doesn't really cover holistic risk and loss. So those are some, I would say, questions or challenges to see how we can adequately address those in a very succinct or systematic manner.
Colleagues, we've gone over our hour and we've gone over the 10-minute buffer, and that's because you had so much expertise and passion and content to share. So apologies for the questions we couldn't go to. We could do this for a day, and perhaps in the future we will. But for now, let me thank most earnestly our panelists who shared your talents and vision with this audience, and thank the audience for joining us. We're all passionate about islands. Now you're all passionate about insurance. And in the theme of the beginning, let's keep working to collaborate together, both to protect against these risks and to pursue exciting new opportunities. Thanks for joining us today.
Thanks, everyone. Thanks, Steve.